Human capital as a driver of business performance, the Netflix approach abstract. This article examines how leading organizations are reimagining the human resources, HR, function as a strategic driver of business performance rather than a traditional support function. Using Netflix as a primary case study, the analysis explores how the company's HR team has grown 47% faster than the rest of the organization since 2012. Demonstrating a fundamental shift in our organizational positioning. The research synthesizes evidence on the organizational and performance benefits of investing proactively in HR capabilities, especially in knowledge-intensive and innovation-driven environments. The article presents evidence-based approaches to HR transformation, including strategic workforce planning, performance-oriented talent systems, and data-driven people analytics. Practical implications focus on how organizations can reposition HR functions to create competitive advantage through human capital optimization in rapidly changing business environments. In today's knowledge economy, competitive advantage increasingly depends on an organization's ability to attract, develop, and deploy human capital effectively. Despite widespread acknowledgement of this reality, many organizations continue to treat their human resources function as a reactive support unit rather than a strategic driver of business performance. This traditional approach creates a significant disconnect, while executives routinely cite people as their most valuable asset. The function responsible for optimizing this asset often remains underinvested and peripheral to strategic decision-making. A striking counterexample to this trend emerged recently when data revealed that Netflix's HR team has grown 47% faster than the rest of the company since 2012. Davis, 2023. This anomalous growth pattern represents a radical departure from conventional HR scaling models and suggests a fundamentally different approach to human capital management. Rather than expanding HR reactively to address organizational problems, Netflix appears to have proactively invested in HR capabilities to drive performance at scale. As organizations navigate increasingly complex talent markets, accelerating technological change, and evolving workforce expectations, the Netflix approach offers a compelling alternative to traditional HR models. This article examines the evidence for treating HR as a driver of business performance and explores how organizations can implement this approach to create sustainable competitive advantage. The strategic HR landscape defining human resources as a strategic business driver. The evolution of HR from an administrative function to a strategic business partner represents one of the most significant shifts in organizational design over the past 3 decades. This transformation involves reimagining HR not merely as a service provider but as a critical driver of organizational strategy and performance. Ulrich and Julbone, 2015. In traditional models, HR primarily focuses on policy development, compliance, and administrative tasks. In contrast, strategic HR functions directly contribute to value creation through talent optimization, organizational design, and culture development. The strategic HR paradigm positions human capital management as a core business process rather than a support function. Under this model, HR leaders become key members of executive teams, contributing directly to business strategy rather than simply implementing it. This repositioning requires HR professionals to develop deep business acumen, analytical capabilities, and strategic thinking skills beyond traditional HR competencies. Boudreau and Ramstad, 2007. Prevalence, drivers, and distribution of strategic HR. Despite widespread discussion of strategic HR in management literature, implementation remains uneven across industries and organizations. According to research by Deloitte, only 5% of companies believe their HR performance is excellent, while 32% rate it as underperforming. Deloitte, 2019. This disconnect suggests that while many organizations aspire to strategic HR, relatively few have successfully implemented this approach. Several factors drive the transition toward strategic HR. First, knowledge-intensive industries face increasingly complex talent challenges that require sophisticated HR capabilities. Second, digital transformation has created both opportunities and imperatives for HR to leverage data and technology. Third, changing workforce expectations, particularly among younger employees, demand more sophisticated approaches to engagement and development. Capelli and Tovis. 2018. Industry distribution of strategic HR adoption shows significant variation. Technology companies like Netflix, Google, and Microsoft have been at the forefront of reimagining HR, while more traditional industries often maintain conventional HR models. Organization size also influences adoption. Larger enterprises typically have more resources to invest in HR transformation but may face greater institutional inertia, while smaller organizations can implement changes more quickly but may lack specialized HR expertise. Lawler and Boudreau. 2015. Organizational and individual consequences of strategic HR. Organizational performance impacts. Organizations that position HR as a strategic driver rather than a support function demonstrate measurable performance advantages. Research by Boston Consulting Group found that companies with strong HR capabilities delivered profit growth 3.5 times higher than companies with weak HR capabilities over a 3-year period. BCG, 2017. This performance differential becomes particularly pronounced in knowledge-intensive industries where human capital quality directly influences organizational outcomes. At Netflix, the disproportionate growth of the HR function correlates with extraordinary business performance. During the period when HR grew 47% faster than the rest of the company, 2012 to 2023, Netflix transformed from a primarily U.S. focused streaming service to a global entertainment powerhouse with successful content production capabilities. This transformation required sophisticated talent acquisition, development, and management systems that could not have been delivered through a traditional HR model. Quantified effects of strategic HR investments include 22% higher revenue per employee in organizations with sophisticated talent analytics capabilities. Bursin. 2019, 18% higher productivity in organizations that align HR systems with business strategy. Huselid. 1995, 40% lower employee turnover in companies with strategic talent management practices. Gallup. 2020, these performance differences become particularly significant in high-growth environments where talent constraints often limit organizational scaling. By investing proactively in HR capabilities, organizations can remove these constraints and accelerate growth. Individual well-being and stakeholder impacts beyond organizational performance. Strategic HR approaches significantly impact individual employee experiences and outcomes. When HR functions primarily as a compliance-focused support unit, employees typically experience standardized processes designed for risk management rather than personalized experiences designed for performance optimization. Strategic HR organizations, by contrast, typically implement sophisticated approaches to employee development, feedback, and career management. At Netflix, the company's famous freedom and responsibility culture depends on highly developed HR capabilities to function effectively. Without sophisticated talent selection, performance management, and compensation systems, such a high autonomy environment would likely produce chaos rather than performance. McCord. 2018. Research demonstrates that employees in organizations with strategic HR functions report 37% higher engagement levels. Gallup. 2020, 31% greater job satisfaction. Lawler, 2017, 42% stronger alignment with organizational purpose. McKinsey. 2020, these individual-level impacts translate directly to customer experience quality, particularly in service-oriented businesses where employee-customer interactions significantly influence outcomes. Organizations with strategic HR functions demonstrate 24% higher customer satisfaction scores on average. Illustrating how internal HR capabilities ultimately influence external stakeholder experiences, Heskett et al. 2008. Evidence-based organizational responses building performance-oriented talent systems. Organizations successfully repositioning HR as a performance driver typically begin by reimagining their talent management systems to focus explicitly on business outcomes rather than administrative compliance. These performance-oriented talent systems differ fundamentally from traditional approaches in their design principles, measurement approaches, and implementation methods. Effective approaches include outcome-based role design, defining positions based on expected business outcomes rather than activities or qualifications, performance-differentiated talent practices, creating significantly different experiences for high, average, and underperforming employees, continuous feedback systems, replacing annual review cycles with real-time performance conversations, skills-based talent architecture. Organizing talent systems around critical capabilities rather than conventional job hierarchies, leader accountability for talent outcomes, making people development a core leadership responsibility rather than an HR-owned process. Microsoft transformed its talent management approach through its growth mindset framework, which replaced traditional performance ratings with forward-looking development conversations. This shift required significant capability building among managers, who needed new skills to deliver effective coaching rather than simply assigning performance scores. The company's HR team developed sophisticated manager training programs, digital tools to support coaching conversations, and metrics to track the quality of development discussions. This transformation contributed to Microsoft's business renaissance under CEO Satya Nadella, helping the company attract and retain technical talent in highly competitive markets. Dweck and Hogan. 2020. Implementing strategic workforce planning. Strategic workforce planning represents a critical capability for organizations seeking to position HR as a performance driver. Unlike traditional headcount planning, strategic workforce planning connects business strategy directly to talent requirements, identifying capability gaps and development needs before they constrain organizational performance. Effective approaches include scenario-based planning, developing multiple talent scenarios based on different business outcomes, critical role identification, focusing disproportionate resources on positions with outsized performance impact, build by borrow analysis, creating sophisticated frameworks for determining whether to develop, acquire, or contract for specific capabilities, future skill forecasting, identifying emerging capabilities required for competitive advantage, location strategy optimization, aligning geographic talent footprints with business requirements and talent availability. Unilever implemented advanced strategic workforce planning to support its ambitious sustainability and digital transformation initiatives. The company's HR analytics team developed sophisticated models to identify future capability requirements, particularly in digital marketing, sustainable sourcing, and data science. These models enabled Unilever to begin building critical capabilities before competitive talent markets tightened, providing significant first-mover advantages. The company established digital skills academies, implemented specialized recruitment programs for data scientists, and created accelerated development paths for sustainability experts, all before these talent categories became universally sought after. Unilever. 2020. Developing advanced people analytics capabilities. Organizations that treat HR as a strategic driver invariably develop sophisticated people analytics capabilities that connect human capital metrics directly to business outcomes. These capabilities enable evidence-based decision-making about talent investments and provide quantitative demonstrations of hours business impact. Effective approaches include outcome-linked analytics, connecting people metrics directly to business performance indicators, predictive talent models, developing algorithms to forecast retention, performance and development trajectories, natural language processing for sentiment analysis, using AI to analyze communication patterns and employee feedback network analysis, mapping collaboration patterns to identify informal influence and knowledge flows experiment design, creating control trials to test the impact of HR interventions. Google's People Analytics team pioneered many approaches now considered best practices in the field. The company famously used analytical approaches to solve practical talent challenges, from identifying the most effective interview questions to optimizing team composition for performance. One particularly influential project, Project Oxygen, used sophisticated data analysis to identify behaviors that distinguished effective managers. This analysis revealed that technical expertise was less important than coaching ability, creating significant implications for Google's management development approach. The company redesigned its management training based on these findings, demonstrating the direct connection between analytics-driven insights and talent practice innovation. Garvin, 2013. Aligning HR operating models with business strategy. Organizations successfully implementing strategic HR approaches typically redesign their HR operating models to align directly with business strategy. This redesign moves beyond the generic three-tier models, centers of excellence, business partners, shared services, popular in the 2000s, toward more customized approaches that reflect specific organizational contexts and priorities. Effective approaches include product management models, organizing HR around employee experience, products, rather than functional specialties. Agile HR methodologies, implementing sprint-based approaches to HR solution development. Business-embedded specialists, placing HR experts directly in business units rather than centralizing all expertise. Technology-enabled service delivery, creating digital platforms for transactional HR to enable strategic-focused design thinking. Methodologies, applying user-centered design approaches to HR solution development. Airbnb reorganized its HR function, which it calls employee experience, around employee journey moments rather than traditional HR domains. Instead of having separate teams for recruitment, learning, and performance management, the company created integrated teams focused on employee journeys like joining the company or growing a career. This structure enabled Airbnb to create coherent, high-quality employee experiences rather than disconnected HR transactions. The company's HR team includes designers, data scientists, and engineers alongside traditional HR professionals, reflecting its product-oriented approach to employee experience. Chesky, 2021. Building long-term human capital capabilities. Creating HR business integration mechanisms. Organizations seeking sustainable strategic HR capabilities must establish formal and informal mechanisms to integrate HR with core business processes. These integration mechanisms ensure that HR perspectives inform business decisions and that business priorities shape HR strategies. Successful organizations implement several key approaches. First, they position HR leaders as full strategic partners in business planning processes, ensuring human capital implications are considered during strategy formation rather than afterward. Second, they create formal governance structures like talent councils that bring together business and HR leaders to make joint decisions about critical talent issues. Third, they implement shared metrics that evaluate both HR and business leaders on talent outcomes, creating mutual accountability for human capital results. At Netflix, the integration of HR into business strategy begins with role design. HR business partners at the company are expected to understand the business deeply and contribute directly to strategic decisions rather than simply implementing talent processes. The company explicitly hires HR professionals with business acumen and strategic thinking capabilities, often bringing in individuals with non-traditional HR backgrounds. This approach ensures that HR perspectives influence business decisions from inception rather than being considered as afterthoughts. McCord, 2018. Developing human capital acumen among business leaders for HR to function as a strategic driver. Business leaders must develop sophisticated human capital acumen rather than delegating people issues entirely to HR specialists. Organizations that excel in this dimension create systematic approaches to building talent management capabilities among their entire leadership population. Effective approaches include developing common talent assessment frameworks that all leaders use to evaluate capability and potential. Creating standardized processes for talent review discussions that ensure consistent evaluation criteria. Implementing regular talent immersion experiences that connect senior leaders directly to emerging talent. And establishing clear accountability for talent development outcomes in leadership performance expectations. Goldman Sachs has institutionalized human capital acumen development through its approach to leadership transitions. When executives move into new leadership roles, they receive structured talent assessment training and dedicated coaching on human capital management. The firm's First 100 Days program for new leaders devotes approximately 40% of its content to talent assessment, development, and team building. This systematic approach ensures that business leaders develop human capital management as a core competency rather than viewing it as an HR responsibility. The firm's CEO regularly begins business review meetings with talent discussions, signaling the centrality of human capital to business performance. Siegel and Bock. 2021. Building organizational adaptability through talent systems as business environments become increasingly volatile. Organizations must build adaptability into their talent systems. This capability enables rapid reconfiguration of human capital to address emerging opportunities and challenges without requiring complete system redesigns. Key approaches include implementing skills-based talent architectures that enable flexible deployment across organizational boundaries, creating internal talent marketplaces that match capabilities to opportunities regardless of hierarchical structures, developing contingent workforce strategies that provide capacity flexibility during uncertain periods, building continuous learning ecosystems that enable rapid capability development, and designing compensation systems that reward adaptability and learning agility. MasterCard built organizational adaptability by implementing an internal talent marketplace called Unlocked. This platform enables employees to find short-term project opportunities across the organization, developing new skills while addressing business needs outside their formal roles. The system algorithmically matches employee capabilities with project requirements, creating thousands of developmental experiences annually without formal role changes. This approach has enabled MasterCard to rapidly deploy talent to emerging opportunities, particularly in digital payments and cybersecurity, while simultaneously accelerating employee development. The company credits this system with improving both retention of high-potential talent and organizational responsiveness to market changes. MasterCard. 2022. Conclusion: the Netflix approach to human resources, growing the function 47% faster than the rest of the company, represents a fundamental reimagining of our role in organizational performance. Rather than treating HR as a support function that scales reactively to address problems, Netflix positioned HR as a strategic driver that proactively builds capabilities to enable growth. This approach aligns with substantial evidence that sophisticated human capital management directly contributes to business performance, particularly in knowledge-intensive industries. Organizations seeking to implement similar approaches should focus on several key dimensions. First, they must build performance-oriented talent systems that explicitly connect human capital practices to business outcomes. Second, they need sophisticated workforce planning capabilities that anticipate future talent needs rather than responding to current gaps. Third, they should develop advanced people analytics functions that provide evidence-based insights for talent decisions. Fourth, they must redesign HR operating models to align directly with business strategy rather than generic functional models. The transformation of HR from administrative support to strategic driver represents one of the most significant opportunities for organizational performance improvement in the coming decade. As digital transformation accelerates and competitive advantage increasingly depends on human capabilities, organizations that invest proactively in sophisticated HR functions will likely outperform those that maintain traditional approaches. The Netflix case suggests that disproportionate investment in HR capabilities may yield disproportionate returns, a hypothesis worth testing in organizations seeking sustainable competitive advantage through human capital.